And in addition to that, as I'm sure you know, Anna is Italian and has got relatives in Italy, and it's pretty grim there. So it's been very emotional the last few weeks. So apologies for that. But there we are. It's just the way things are at the moment. Okay, let's just move the chat box out of the way. I've got the Aussie yen up here. I've also got Trading View over to the right. Maybe we start with Trading View. Let me just pull this across if I can. There we are from the other screen. There we go. We have the indicators on Trading Screen, not on Trading View, not all of them. I've just got what I've got here. I've got this is the FTSE 100 here, which has just opened up. As you would expect, climbing. This is real time. Below, I've got the DAX futures. That's on delayed on this particular feed, but the FTSE is nicely up and looking to push higher. But over here, this is what I really wanted to pull up. This is the VIX. For those of you who are familiar with it, it's basically looking. It's a fear indicator, if you will. It's looking at the balance of calls and puts on the markets, and it's something we've been involved with. We're a microcosm of this, if you will. Last few weeks, very much buying puts, and now we're looking to buy calls. And if you're looking to get involved in sentiment and direction in equity markets, then options are a great way to get in. You're paying a premium, and that's your biggest risk. So the cost of the premium, that's all you're going to lose. You're not involved in the actual stock itself. In the underlying, you've got 100 effectively in terms of the premium you're holding. And it's just a nice way to take advantage of these longer term trends, buying puts or buying calls. It's a low risk approach. And certainly we're looking at shifting now from holding puts to holding call options as the market sentiment starts to shift, which is broadly what is happening in terms of currencies and everything else. So that's the volatility index. That's what it's doing at the moment. It's gapped down again. We're down to 57.9. I think the high we hit was somewhere in the high 80s, but that's really just an indication of the reduction in risk sentiment and a gradual, hopefully longer term return to risk on sentiment, and that's all reflected in the VIX. So again, it's a key indicator. Just go back and see what the FTSE 100 is doing. Okay, that's nicely up and everything's ticking up. I've got the US futures running here. I'm just going to start. This is the Aussie yen. Strung across the top, I've got 15 second, 3 minute, 5 minute. And I'm also conscious of the fact we're going through London, so the volumes are starting to pick up. Just highlight the 15 minute here. It's got a nice little volume lesson here. As we got up to the top of this rally, this was the nice thing with Ninja, and it doesn't happen on MT4 and MT5. It's generally doesn't align with your local time zone, but certainly in terms of Ninja, it does. So we are now 12 minutes past 8 in the morning here in the UK. So this is 6 o'clock, 7 o'clock, 8 o'clock our time. This was the run up during when we were up and about. This was the run up during Europe, as Europe gets underway here at 7 o'clock. But what you see here is just some classical price action. The market's going higher, and then you start to see this sort of price action. Not on terribly high volume on that one, but look at the next candle. A lot of volume driven in, the highest volume really of this phase of price action, if you like, and the market is really not responsive. In other words, there is a great deal of selling in here. The market's, it doesn't mean it's going to reverse from this upwards trend into the downwards trend, but it's a signal to you that there is weakness about, and therefore the candles which follow, these two candles which follow, you expect them to appear because that candle alone is telling you that there is some short-term weakness coming into this market. Excuse me, I'm just going to switch off for a moment. Sorry, I just had to clear my throat. So that's the beauty of volume price analysis. Not only does it gives you strong signals as to what is likely to happen next, but having that knowledge gives you confidence, and it removes a lot of that fear and panic that sets in when you're in a position and the market starts to move against you and you don't understand why. And that's the power of what volume gives you. It gives you not only the advanced signals of what is likely to happen next, what is coming down the track at you, and therefore the decision-making process, you're already starting to think, well, okay, I'm expecting to see that. I'm now seeing it. how strong is that selling or how strong is that buying if it's going against you, and make some logical, common sense, analytically based decisions on that information. And that's what it does. It reveals what's going on inside the market. It reveals what the market makers are up to, because it's the big volume that you will see. And that's the power of volume price analysis. And as you can see on this little reversal here, it's a tiny little example. But when you see this sort of thing going on, where you've actually got falling volume under a falling market, it's giving you a strong clue that the selling pressure is weakening. In other words, if the market were truly going to reverse and we were going to see a primary to primary reversal, then you would expect to see rising volume under here, and you're not seeing falling volume. That is the power of VPA. It just helps to keep you in. It helps to give you all the advanced indicators and the information to assess what to do next. It's not you're not making decisions in panic and fear. You're making decisions based on logical analysis of the market. I mentioned earlier on about the daily on the Aussie yen, and I'm sure you appreciate the Aussie yen is a sentiment pair. You've got risk on one side in terms of commodities, and you've got risk on the other side in terms of the yen. So it's a balancer, it's an indicator. In many ways, you can think of it much the same way as you would do the VIX. The VIX is obviously inverse. As the VIX falls, then you expect risk on sentiment to rise and vice versa. But what I wanted to highlight here, you can see it clearly enough. It's self-evident, the amount of volume that has been absolutely piling into this market. We have this massive volatility day here, extraordinary day of trading with a ton of volume. But what's interesting now is look at the volume here. This is actually the highest volume on the daily chart, which was yesterday. There's an absolute ton of volume coming into that. And I would urge you, if you don't look at the daily charts, if you're an intraday trader and you don't look at daily charts, please look at them, because they will give you a heads up as to potential direction for the following day. They're not, it's not a guarantee, but it gives you that heads up of the balance of buying and selling on the day. It also gives you ranges in terms of what was the high of the day, what was the low of the day. Are we trading within that range? Are we moving outside that range? And so on and so forth. So this is an absolute classic signal. We've got an absolute ton of volume coming under here. The market fell, it recovered, it closed higher on the day. What does that tell you? There's only one thing you can conclude from that. There is massive, massive buying going on in here. There will also have been accumulation going on in here, but you can't see it because the swings are so wild. There was some weakness in here, but nevertheless, there is more buying than selling because the body candle closed up. We're also up at the volume point of control, so one has to exercise a little bit of caution here. But now what we want to see is a good solid, if this is going to develop further into a reversal from this primary trend lower into a primary trend higher, and it's not going to go straight back up in a V-shaped rally, almost certainly we will see, yes, a change in sentiment, but certainly congestion phases build. And remember, markets never go up as fast as they fall. A market will always fall faster than it rises. 99.9% out. There will always be an exception, but generally speaking, as a rule of thumb, that is the way to view it. It's why I have a bias to the short side, because markets tumble and it's a much quicker in and out process. When markets are rallying, it's generally a little bit more labored. There are lots of reasons for that. We explained it all in the program. I'm not going to go into it here. In terms of looking at this particular chart, if you're looking at this for a longer term buy and hold, for example, over days, perhaps into weeks even, what you're looking at here is, first of all, a move away from the volume point of control, which is this yellow dashed line. We've got a ton of volume around here, which is always the heaviest concentration of volume. What we're therefore looking at thereafter is where the volume falls away. And if we can get up to this level here at 69, we're really down into low volume territory. So if the market is able to recover, it may take a few days, it may take a couple of weeks, but if we get back up to this sort of level, should move through there pretty swiftly. The real major sticking point thereafter is back up at 74, where this market was congesting for quite some time. We've got this very strong region of resistance in place here. We've got an increase in volume. So in terms of the actual travel of this pair, assuming all things being equal, first of all, we've got the trend monitor, which hasn't transitioned yet, which you wouldn't expect it to. It's still heavily bearish. But if you're on faster time frames, it certainly will have done, but certainly not on the day. Once this starts to transition through into maybe darker red, maybe it'll go through straight through into blue, who knows? But that's something to watch over the next few days. Then as this starts to take off, obviously what we're looking for in terms of the daily charts, we're looking for nice, good, strong price action supported by good volume, confirming that the buyers are taking this mark and it's not a spoof breakaway, which seems very unlikely at the moment. Certainly the volume is building nicely and we're only a few hours into the session. Took longer over that, just wanted to highlight that for you, just to give you a different view, a different flavor, if you will, of what we normally look at. Now we're going back down to the other extreme. This is 15 second, this is 3 minutes. This is very, very quick. Not suggesting you will go to that, but it's one I like to have because it gives me a heads up what's coming on down into the slightly slower time frames. This is the 3 minute and over into the 5 minute. Obviously, what we've got to bear in mind is when we're looking at charts now, because we've gone through the London session, which was here, in terms of comparing like with like, this was the volumes coming out of Asia. We had a real big pickup in volume, which is unusual, coming through Asia into Europe. The volumes have actually fallen away into Europe. So the volumes here are quite interesting. We're not seeing huge volumes. I'm just looking over on the right-hand side to see what's going on in terms of UK, and just have a quick look at the VIX. Apologies, just go over here for a moment. Sorry, get my cursor around the right way. There we go. Okay, that's ticking up a little bit. But it's still pretty much in congestion. Okay. But what's interesting at the moment is the volume here is not as huge as I would expect. Normally what we see is actually the reverse of this. So in other words, what we would normally see is a lot of this sort of type of volume coming in here, and this volume over here would be pretty much like that. So it's almost a mirror inversion of what we normally see, which is a lot of volume coming into London because it's the deepest liquidity in market terms, and not so much over here. This is coming out of Asia where normally volumes are falling away. So it's quite interesting at the moment. And given that is the case, obviously what we've got to be conscious of is this move, is this rally that we're seeing at the moment, is it actually going to follow through in London, or is there a certain amount of weakness that is not inclined to follow through? Let's have a quick look at the US indices. It's not looking that strong right now, certainly in terms of the London Open anyway. Let's go here. Excuse me. This is the three indices, the US indices. This is trading on Globex. So these are electronic at the moment. We've got the YM up here, top left. These are all 5 minute time frames. So we've got the YM, the NQ, the NASDAQ, and then over on here on the right hand side, we've got the S&P 500. And down at the bottom, we've got the daily equivalent. Just move the chat box out of the way. Sorry, just get that out of the way a bit. So down at the bottom, we've got the daily YM, NQ, and ES. So that gives a pretty good flavor of what's going on in terms of market sentiment, broad market sentiment. Of course, that's reflected in the FTSE 100 also, as you would expect. The problem that we've got in terms of volume analysis on the daily charts, certainly for these contracts at any rate, is that the volume here is all over the place. And the reason for that is because these markets have been moving in such wide ranges. There are various mechanisms which kick in on the futures contracts, which prevent the market being traded. They're breakers, they are percentage breakers. And when the market moves in a particular wide range, those breakers kick in to prevent any further trading, to stop that cataclysmic move in price action, which is what we've seen. So a lot of the volume in here is not as you would think. It's not low volume. It just merely reflects the fact that we haven't seen a full 24-hour trading volume in here. It's all been truncated. So it's a little bit difficult at the moment to interpret them on the dailies, and also obviously that's reflected on the weeklies. But just to be aware of it, in case you're looking at these and thinking they look a bit odd, that's the reason why. We're all trading around the volume point of control. As you can see, the strongest at the moment, or certainly the one that's been leading the way, is the NASDAQ, although the others are not too far behind, but certainly the NASDAQ has been taking things higher. Just pull that over a little bit. We're trading around the volume point of control, which is the yellow dash line here. So we're in congestion, we're expecting congestion. And again, you're looking at these, you're looking at the volume profile, what's going on. Okay, again, in fact, a pretty similar example to the one I showed you earlier on the Aussie yen. Here, if we take this as our little benchmark candle, if you will, widespread up candle, and we look at the volume under it. That's fine, only a little wick to the upper body. So, that was fine. And then the next candle comes along. What have we got? Compressed price, wick to the upper body, and higher volume. So what does that tell you instantly? It tells you that you're expecting some weakness in this market. This is not a strong signal. It doesn't mean it's going to happen on the next candle, but it's just giving you a sign that there is selling. There is heavy selling going into this particular candle. The markets are not responding. The price action hasn't responded, because if you look at it in very simple terms, if this previous candle with volume was your benchmark, then what this should have done in terms of price should have been at least that, possibly a little bit more, and it hasn't. So what is that telling you? It's a little bit like, there's so many different analogies, but imagine an old a bicycle tire, for example. You've got the pump and you've pumped it up, and you're trying to pump more air into it, and it's just not going any further because it's full. So you're trying to pile more pressure in, and that tire is not going to inflate any further. It's reached its capacity. It's a very simple analogy, but hopefully one that makes sense. And that's basically what's happening here. You've got this ton of effort going in, and there's no result. And that's really, as Anna said, you've got Wyckoff, and it's the basic principle of Wyckoff: effort and result. If effort goes in and there's no result, then it's anomaly. There's something wrong. And you use the benchmarking in that way. And remember also that when you're benchmarking, you have to benchmark within, you have to compare apples with apples. In other words, you can't benchmark across session crossovers, for example, as we're going through at the moment in terms of London, because you would be not comparing apples with apples. You'd be comparing apples with pairs, different sessions. You can't do that. This we're trading electronically, so we can compare this, look at it, and come to decisions based on what we're looking at. We're seeing the heavy selling. We saw the heavy selling come in here. We've seen it here again, even more selling. Interesting though that we've got some buying coming in because we've got quite a deep wick to that lower body, but we're trading around the volume point of control. So there's a lot of congestion going on. I'm just looking over on the VIX, same sort of thing here. It's just swinging about and pretty much where it was when we opened up, 58.1. So that's what's going on. And in terms of development of a trend, now what we have to do is wait and be patient. If we're trend traders, and let's face it, we're either trend traders or reversal traders. We're not trading congestion here, although you can obviously with options, but we're looking for a breakaway. So what we're looking for now is we have to be patient. We're expecting further market congestion because we're trading around the volume point of control, certainly on these markets at any rate. It's a question of being patient, and once that breakaway develops, then it's back to looking at obviously the volume and the associated volume with that breakaway, because that will confirm whether that move away is genuine or false. And that's why breakout trading or breakaway trading gets such a bad press, because those traders, generally speaking, are not using volume. They're using price action alone. And whilst price action gives you a lot of information, it does not reveal the strength, and it certainly does not reveal whether a move is genuine or false. You cannot tell that. The only way you can see inside the price action in that way is using volume. It's as simple as that. Sorry, I've got my chat box closed. I can hear Anna typing in the background. So if there are any questions, I'm sure she's answering them. I will open the chat box in a moment. Let me just go back to, where did I want to go to next? Let's have a look. Sorry, yeah, I know. Sorry, I've been rabbiting on for a long time. Let's just head over to the currency indices. We've got the currency strength here indicator over here on 15 minute. So that gives you a heads up what's going on right now in that sort of time frame. Still seeing selling of the yen, buying the Aussie. That's tailed off a little bit. The New Zealand starting to rise quite nicely again there as well. We've got, this is the yen. This is on 15 minutes. So this is the yen index where my cursor is. This is the dollar. This is the euro. And this is the British pound at the moment. So the yen is still falling. There's a little bit of a reversal possibly coming in here. The dollar is flatlining at the moment into congestion, seeing some decent selling, but now it's in a congestion phase. The pound's in congestion, so maybe the pound yen, pound dollar won't be moving very much at the moment. And certainly looking at those two charts in isolation, 15 minute there, then cable, I can tell you without even looking at a chart, is in congestion because you've got the dollar moving sideways and you've got the pound moving sideways. And for any move in any currency pair, you've got to see either strength in one currency or ideally strength in both. So if the dollar starts to rally strongly and the pound starts to sell off strongly, then you're going to see a very strong move in cable and vice versa. I'm just going to pass back to, let's just go back to the where we started. There we go. That's on the currency charts at the moment. So yeah, we've got a pause point going on. It's what we're expecting to see. It's certainly what's happening in terms of the indices. And as you can see, the volume point of control, the yellow dashed line, is very much in evidence across that particular currency pair. Let me pass back to Anna.